The company that was worth $47 billion. Then everything collapsed. Imagine building a company that investors value at almost $47 billion. You have offices in major cities around the world. Thousands of employees. Millions of customers and members. Some of the biggest investors on the planet are putting billions of dollars behind you. Everyone thinks you are building the future. And then, you try to take your company public. Suddenly, investors start looking at the numbers. The excitement disappears. The valuation collapses. Your CEO is forced out. And just a few years later, the company files for bankruptcy. This is the story of WeWork. And the most interesting part isn't simply that WeWork failed. It's how a company once valued at roughly $47 billion became one of the most famous examples of what happens when a great story grows faster than the business behind it. The idea. WeWork was founded in 2010. The idea sounded simple. Instead of a company renting an entire office for years, WeWork would rent large buildings, redesign them into modern workspaces, and then rent desks and private offices to smaller companies, startups, and freelancers. But WeWork wasn't selling ordinary office space. The company wanted to create a community. Modern offices. Coffee. Meeting rooms. Events. Networking. Flexible memberships. The experience was designed to feel completely different from a traditional office. And this was exactly what investors loved. WeWork wasn't presenting itself as just another real estate company. It was presenting itself as a company that could completely change the way people worked. And that story was incredibly powerful. The rise. WeWork began expanding rapidly. New locations appeared across the United States. Then Europe. Then Asia. The company was growing at an extraordinary speed. Investors poured money into the business. One of its most important investors was SoftBank. As more money came in, WeWork could open more locations. More locations created more members. More members created more revenue. And the story became even more exciting. At its peak, private investors valued WeWork at approximately $47 billion. That is an enormous number. But there was a problem hiding underneath the growth. WeWork was losing huge amounts of money. And its business model had a fundamental weakness. The business model. Think about what WeWork actually had to do. The company would sign long-term leases on huge buildings. That meant WeWork had to pay landlords for years. Then it would rent offices and desks to customers, often on much shorter agreements. When business was strong, this could work. But what happens when customers leave? WeWork would still have to pay the landlord. That meant the company was taking on enormous long-term obligations while depending on customers who could leave much faster. And WeWork was expanding aggressively. The company needed more buildings, more employees, more customers, more investment, and more growth. The bigger the company became, the more money it needed. But as long as investors believed in the future, the money kept coming. Then came 2019. And everything changed. The IPO. WeWork wanted to become a publicly traded company. This meant ordinary investors could buy shares. And for WeWork, an IPO could provide a huge amount of new money. But before a company goes public, investors get to see much more information about its finances. WeWork released documents connected to its planned IPO. And people started asking questions. Very serious questions. How much money was the company actually losing? Why was a company built around office rentals being valued like a giant technology company? Could the business model really produce sustainable profits? And then there were questions about the company's founder and leadership. The closer investors looked, the more uncomfortable the story became. The enormous private valuation suddenly looked much harder to justify. The IPO was effectively abandoned. And the company that had once been valued at roughly $47 billion suddenly faced a completely different reality. The founder, Adam Neumann, was one of the most recognizable figures in WeWork. He was charismatic, ambitious, and obsessed with growth. He helped turn WeWork from a small startup into a global company. But his leadership style also became controversial. As pressure increased in 2019, Newman stepped down as CEO. The company needed to change direction. The massive growth strategy had to slow down. Costs had to be reduced. And investors needed to know whether WeWork could actually become a sustainable business. But then something happened that nobody at WeWork could have planned for. The world shut down. The pandemic. In 2020, offices around the world began closing. Millions of people started working from home. Companies suddenly realized that they might not need as much office space as they had previously thought. For WeWork, this was a disaster. Remember the business model. The company had long-term obligations to landlords. But customers could reduce their office usage much faster. Demand became uncertain. Revenue suffered. And the company was already dealing with enormous financial problems. WeWork tried to adapt. It changed leadership. It cut costs. It renegotiated leases. But the company still had a huge amount of debt and contractual obligations. The business was no longer chasing unlimited growth. It was trying to survive. The collapse. Years after the failed IPO, WeWork continued fighting to restructure its business. But the financial pressure became too great. In November 2023, WeWork filed for Chapter 11 bankruptcy protection in the United States. Think about the journey. A company once valued at approximately $47 billion. Now, bankruptcy. The company entered restructuring negotiations with its creditors and landlords. Billions of dollars of debt were eliminated or restructured. Leases were renegotiated. The company became dramatically smaller. Eventually, WeWork emerged from bankruptcy as a very different business. The dream of becoming a revolutionary technology giant was gone. The focus was now much simpler. Build a business that can actually survive. So what went wrong? Was the original idea terrible? Not necessarily. Co-working spaces still exist. Companies still use flexible offices. People still want places to work. The problem was the combination of several things. Aggressive expansion. Huge financial commitments. Massive losses. A valuation based on enormous future growth. And then a global pandemic that completely changed the office market. But there is an even bigger lesson. A great story can make people believe in a company. But eventually, the numbers have to support the story. The $47 billion question. This is what makes WeWork so fascinating. At its peak, the company looked unstoppable. Investors were excited. The offices looked futuristic. The company was expanding around the world. And the valuation kept rising. But a private valuation isn't the same thing as money sitting in a bank account. It represents what investors believe a company could eventually be worth. And when that belief disappears, the valuation can disappear with it. WeWork didn't suddenly lose $47 billion from its bank account. The number represented a valuation. But the collapse showed how quickly expectations can change. The biggest lesson. WeWork's story isn't really about office buildings. It's about growth. For years, growth was the central part of the story. More locations. More members. More revenue. More countries. More investment. But growth can hide problems. A company can become larger every year and still lose enormous amounts of money. And if the business needs constant new investment to keep expanding, eventually someone has to ask a simple question. Can this company survive without constantly raising more money? That question became impossible to ignore. And when investors finally asked it, the entire story changed. Today, WeWork is still a recognizable name. But the company that emerged from bankruptcy is dramatically different from the company investors once imagined. The massive valuation is gone. The aggressive expansion is gone. The focus is now on building a more sustainable business. And perhaps that's the strangest part of the entire story. WeWork didn't fail because nobody wanted flexible offices. It failed because the company's ambitions, financial commitments, and valuation grew far beyond what the business could sustainably support. The company wanted to change the way the world worked. Instead, It became a warning about the dangers of growing too fast. Final. A company can have the best offices, the biggest investors, the fastest growth, and the most convincing story. But eventually, the numbers have the final word. Because $1 billion valuation is only a belief. Until the business proves it. This is BLACKLEDGER. Money, power, stories, and the moments when billions disappear.